Hello, fellow traders. Long time no see. I haven't posted in quite a while because I've been kind of on my own time and quite busy with personal things and just kind of enjoying some free time. But I know a lot of you are eager to find out what I've been doing lately, so I'm going to try to get back into posting a little bit more regular. If you're new to the channel, make sure you subscribe. I'm going to get back to posting here and show you quite a few interesting things I've discovered while I'm away. And one of those things I'm going to actually show you today. So right now I'm in a current trade. This is right after I posted the screenshot of a different trade that I took. And I'm going to see if I can get the pen working and everything working correctly this time. But basically, we have a few different things going on, and while I watch this trade, I'm going to try to explain the strategy and what all I'm doing here. But we have a few different things going on with trading. One of the things that we obviously know is that we're going to lose occasionally, and we have to have an R ratio that's big enough to actually account for those losses plus spread and commission. So those are additional costs in your trade that you're going to have to account for, and the best way to do that is to get a high R ratio. Now, a lot of you think that maybe you have to get a large area, 1,000 pips, something ridiculous like that in order to get a high R ratio. But really, all we need to do is focus on our entry and follow. So what we have going on here is I'm on a 2-minute chart. This is the Euro USD. We're in the Tokyo session, and I have a 20 and a 200 SMA. These are SMA, simple moving averages. Now all we're going to do is kind of follow along with this 20, and anytime price is above it, if that 20 is moving up, we kind of want to be looking for a long entry, and vice versa for the short. The 200 is kind of like our long-term direction. So in this case right now where we are, we've kind of come down hard, but we're starting to retrace back up, and we did push back up hard on Friday, I believe. Let me clear this out and double check. Yes, so we fell down and pushed right back up hard. So if we come back and look at what we're doing here, it looks like we're moving up. We kind of reacted off the top of a level. Our 20 is moving up, our 200 is moving up, so we're kind of looking long. The short that I took and the long that I took are both the same entry styles though, and what that entry is, it's very simple. All we're doing is we're looking for a basic candle. So like if we're looking to go long, in this case like I did here, price moved above the 20, it made the dark or the black candle, and then we made a green candle. These are the only two types of things we're going to look at, not the actual candle itself, just the color of the two candles, where it is, and the direction we're going. So in this example here, we had the 20 moving down, price started to break above, and it caught the price. So we're looking at this as dynamic support and resistance. It's held the price there and stopped it, so we have that black candle. And our entry is based on the change of the color of these two candles. So in this instance here, we had a green candle break above the black candle. So we are going to take our entry at the break of that black candle and put our stop right below it. This is going to give us extremely teeny tiny stop losses. We're talking 3 to 5 pips. So with those 3 to 5 pips, we're just going to continue holding. So if we're just going to let price come and dabble around. If it starts to break the 20 right there, then we'll take it off. But if it pushes back up, we're just going to keep holding and riding. And you can see very quickly that we are making 4R, 5R, 6R, 7R, 8R, 9R, 10R. Like, it takes very few pips to make a high R ratio, because our stop is extremely micro tiny. We're using a 3 pip stop here. So even if we take a few losses, we can lose 4, 5, 6, 7 times in a row. One trade, one W, and all the other losing streaks that we lost, it doesn't matter, because we are going to actually make a profit. And even if we hit one of these trades where we only lost 2 or 3 times getting there, we're going to get one that's going to go so far away that we're going to boost up 5 to 10% in a day. I mean, I started this session at 2:05. No joke, 2:05. And we're only a couple hours in. I started right here at the open of the Tokyo, and we're only 2 hours in. So I'm up about $13 from where I started, almost $14. And then if I take away the trade, I'm going to let it try to reach up to the 200 a little bit, take it off, and that will actually create quite a bit of gain just for today. So that right there would be somewhere around a 7-hour trade, 6-7-hour trade. So that's going to be the end of the trade. So how am I figuring up my risk? I know that's probably going to be the next most important question. The best way to do this is just take 1% and figure that into just a few pips. So the easiest way to do that is I have a scalper's toolkit that you can find just by simply searching and finding it on TradingView. And once you load that in, let me see which one I need to use, because it's not showing me the one listed on there through the app. I don't think that's the right one. No. Maybe? No. So where are... might need to go under community. But we'll find the Scalper's Toolkit. And it's going to be... not entirely sure why I can't find it. It's not showing me, but it will show you guys. There it is. It will be the Scalper's Toolkit ATR widget. That's the one we want. 209 boosts so far. Now we got the right one. We're gonna basically set our stop to 30 points or 3 pips, or what I've actually done for this setup, about 5. I'm using 3 on this one, about 3.5 to 4. And the reward ratio, we don't worry about too much. We're going to use a fixed size. I like to use a single column, but you can adjust all this other stuff later to your liking. Now this part is important. We're going to put in our account balance that we started with, and we're going to risk between 1 to 1.5%. You can risk a little bit more, but you're going to end up losing quite a bit. But if you'll look at the way percentages actually work towards the account, by staying under the 1.5–2% threshold, you're going to actually be able to lose about 40 times or so before you blow the account in a row, and you'll have to adjust your trade accordingly each time. But you only need a couple of wins, even at 1 to 2 or 1 to 3, just to bring the account back up, and only a few more to double it. But the way I'm showing you to trade here, you're going for these super high R ratios. You're going to hit about 20 to 30%. So as long as you hit more than a 1 to 4, you're going to be good. I promise you're going to be good. Try to go for 1 to 5, 1 to 6. As you get more comfortable holding or following, you can actually hold for a little bit more. I'm going to go ahead and take that one off. So we're looking at a $15 gain on a $205 count. For that, I'm going to go ahead and stop it there, and we'll do the quick calculation. So 205 is where I started. Or wait a minute. 220.61 minus 205.05 is where I started. That's 15.56 divided by 205.05. And we're looking at 7.5% gain just in the first couple of hours of the session of Tokyo. They say you can't make money in the Asian range. Well, I just showed you. So the way we're getting our risks, let's get back on topic. Sorry, I'm kind of focused on a few other things coming up ahead, so I got to kind of finish up the video. But we've already done our setup, and we're showing us maximum stop of about 3. And we're going to mainly look at our lot size. Now, it's recommending a 0.06 that is with a 5 pip stop. Now, each one of these grid lines represents 5 pips, and you see these candles are super small, under 3 pips. I had a 3 pip stop. You had a 3 pip dark candle there you could take. You have the big, large candles. Usually those are going to be a good sign of continuation. Sometimes you may lose if you look to enter, like when it crosses. So when it immediately crosses, we're going down. So had you taken this here, your risk would have been about here. You may have been stopped out, and then it goes anyway. But that's still okay. You could still take these other couple of entries, and even if you lose $4 or $5, it's nothing to come up. Like I just showed you, that was $12, $13. So you might lose 2 or 3 times. You'd be down 6. You hit that one, boom, even down to here. Like I showed on the post, it was about $10. You made 4, and that's actually what I ended up doing because I kind of swapped directions, and that failed. So I entered here, took that down, and I took it off about here when I took the screenshot. So. And then I waited, it crossed back over, and then I took the trade and entered and exited just like I showed you there. So I planned on exiting when it came back to 200, took the exit out, took my money, and now we're up almost 7.5% in a couple hours. And no stress. I'm sitting here explaining to you the strategy. So, while I'm trading, so we're going to just go ahead and do a quick review just to make sure I didn't miss anything and make sure I wasn't overly distracted and misexplained something. We have our 20 period moving average. We have our 200 period moving average. And these are simple moving averages. We're risking 1 to 1.5% of our account. And we're looking for tiny stops, and the way we're going to find these tiny stops, we're going to be on a 2-minute chart, and we're only looking for these candles that cross off of each other. So this would be a long entry. Our enter would be there, and our stop would be just below that black candle. So we're looking to enter as soon as that breaks. Our 20 is going to be below, and our stop is going to be below. Now we're going to have the reverse of that if we're looking for a short. So let's say we are coming up and we have our 20 here. We're going to have some dark candles, not light candles, dark candles. They're going to be forming like this. And then we're going to start to see some green. You're going to want to wait for those greens to get taken out by black. So we're kind of far away from the 20, so you may not get as much distance if this were to go black and you take the entry, but you could still take a small entry here. Again, and stop would be above that green candle. Now if price continues, you still can get quite a bit of R out of that. But let's say we keep getting some more green candles, and this would actually be the optimal situation that we're looking for here. We want price to kind of come back near to that 20, like so, kind of show that it's slowing down a little bit. And then what we're going to do is hopefully this will actually be something small, but you're going to look for that last green candle that comes into that mark. And as soon as we start to get the reaction down again, that green candle gets broken, we are going to immediately enter. Let me find my line again. Enter. Our stop is going above the green candle, and we will watch price continue down. I guess red would be a better color, huh? And we just continue to follow it, and even if it starts to come back up while we're holding it, we're just going to wait for the same situation, and we're going to leave our stop the same. But in this case, you could wait for it to continue to clear, bring your stop down to that last high, because if you had not been in a trade in this situation, you would have taken an enter and put your stop there anyway. So this will protect your small profits, but we don't want to just take it off. The only reason we would want to take our trade off is if we start breaking and closing above this 20. But more than likely what's going to happen is we could flutter around. As long as price stays below it, it could continue to fall forward, and then you look at the difference in that size, and all of this could just occur in a matter of about 20 to 30 minutes. So you don't really need big trades. You don't need a huge amount of time. Now sometimes you could spend a couple hours waiting for this entry to set up. I usually spend a couple hours each night, sometimes a little bit longer, but you can just kind of carry on as you wish and just keep following and flowing with this strategy. As long as you are getting more than one risk per, I would say at least 4 reward. I would try for at least 5 to 6, and try to work on maintaining yourself, because what's going to happen is the price is going to start to come back up. It might flirt with it, but make some wicks right here and flatten out. You may want to get out, you may just want to move your stop down, or you may just want to sit with it up here and hold and wait for it to fall out. But that waiting period is going to really eat you up sometimes if you're really looking at, oh, it was this much at one point, and now we're at this much, and now we're up here at this much. We've lost half our trade just in those couple of comebacks. You may want to end it here. But if you control yourself and understand that when you lose, you are only losing that much. It doesn't matter at all where this price went, if it come all the way back, if it dropped out, it does not matter at all. When you lose this much only. We are not raising stops. Every trader knows they will lose. Great traders accept that losing is part of the game. You are going to have 25 to 30% hit rates sometimes. You're going to have some days where you're not going to hit anything at all. If you realize that the market is not moving and you get out, so what that you're down a little bit? Because what's going to happen, you're going to come in tomorrow and you're going to wind up hitting yet another one of those trades. Over and over and over and over again. And your account is going to explode. It's very simple. Control yourself No, it's just a matter of averages, a law of numbers. It's actually called, if you really want to get nerdy about it and nerd out for a minute tonight or today or in your free time, this actually uses the law of large numbers, and we use the high R to compensate for our spreads and commissions. Nobody wants to actually talk about these costs of trading, but they affect you all the same. With a 1 to 3 strategy, you are going to make less than 4% a month, if you make anything at all. If you increase that to a 1 to 5 or higher, now you're starting to see where people are making this 2, 3, 5, 6. I just showed you 8%. 8%. And I only won 3 trades out of 9. 8% on a 30% hit rate. Because I hit 6R, I hit 5R. These are the numbers that win. So in order to get that, we take our small color change entry and we let it ride. Simple as that. We accept our losses. We risk 1 to 1.5%. If we lose $3. We try again. If we lose again, we lose $3. We try again. If we lose $3. We try again. So all in all, even including commissions, we've lost $12, but we can hit a trade very easily for 16, 20, 30, and just the other day, I hit one for $42. Losing $3 to make 42, who's complaining? So that's the very simple strategy that I'm running. I can see it was a good choice here. Now maybe we may start moving down. We can see the market's in a downtrend, but we're still above that 20, so I wouldn't really kind of take any trade yet. I would wait for price to fall out below that 20, and maybe we get another situation where it's a big candle like this, or we end up actually coming below a little bit. It cups our price. So we may see something like this where the line actually continues out, for example, and then price kind of comes like this, and then we get our black. We take our short, stop above. Look at that, tiny, about 2.5 pips. Big potential. So I'm not going to take that trade. I've actually got to get on to something else right now and kind of end my night, but 8%, I just showed you. You can do it too. Make sure you subscribe, and once we hit 500, I'm still going to put out that video of the other account that I'm running. I actually have a system running that I only have to put maybe an hour of effort into every week, and just last month we cleared about 15%, about 15.6%, 61%. So not a bad return, and it was actually kind of slow because my attention wasn't fully on it, and we had a little bit of a couple sluggish weeks too on the euro. So all in all, though, we had a 100% hit rate on that strategy, and like I say, 1561. So be sure to subscribe if you haven't already. Once we hit 500, I'm going to be dropping that video. So that's all for now. I'm going to make sure this recorded and get it uploaded, and then I've got to get going. Thanks a lot. I'll see you in the next one.